everyone, welcome back to our weekly market update video featuring buy, market, sell and rationale. I'm really grateful here you joining me today as we dive into what's been happening, like what's going on in the markets. Let's start quickly. You know, there has been a lot of uncertainty going on and around tariffs lately, and it's definitely been a big driver, like the major driver of the market prices since last week. It's been like almost like a month, but yeah, at least last week we saw huge volatility in the markets. When we heard that tariffs for countries other than China is going to be postponed for 3 months, the markets reacted really fast. It erased all losses, like on the risky markets, in like a crypto side or in the indices. We saw that all losses were erased and bringing price back to roughly where they were before the inauguration day, when all these tariffs were announced by President Donald Trump. It's wild and how quickly things can shift, right? It's like it was pretty like a difficult environment to manage. So in times like these, it's easy to get caught up in all the strong opinions and like a bold headlines out there. Like I'll be honest, it can pull you away from keeping your mind clear, and like it might push you to use rational perspective on how you manage trade, or you can just like go away from your like current rules and stuff, because you are exposed to a lot of market news, bold statements, and from also highly effective people. It's pretty difficult environment to manage your trades in such case. So what's my approach? Like in these kind of environment, I generally try to step back and let the charts do the like a talking when things get noisy. Like I just want to talk about a bit psychology side, which is pretty important in trading. That's I think rather than your thoughts, your emotions push you into a trade, or like I don't know, just makes you exit. You need to have some set of rules that fits your psychology, by the way. Yeah, it's something personal, I think. And yeah, it's not something like that, okay, just, you know what, it's not happening one day. But I think as time goes on, you start to build an edge and put some set of rules, then you start to act accordingly. Yeah, it's like there has been a ton of like a chatter about big changes coming to global markets. Like the role of the US dollar is like if it's going to change. There's like a China's attempt is like on the other end is trying to push USD from being a reserve currency. A lot of speculation going on. Is it just like a speculation, or is there something real behind it? The truth is, we don't know for sure. Like, it's not something that you can act on. And I, to be honest, don't pretend to have all the answers. That's why I have a mentality to sticking what I can see in the data, what I see in the chart. I've heard a lot of like talkings about like a higher yields, higher for longer for the yields. And for sure, I don't want to dismiss those views. They matter. I'm not trying to neglect those views, but looking at the trends, looking at the rates trends, for example, because since all these speculative environments generate this idea of, okay, there will be much higher inflation on the long end of the curve. That's why the long end of long rates will rise much more. But looking at the trends, I still see a downtrend as the base scenario, at least for now, which is like a more, let's say that soft landing is still seems like the best scenario. At least there is nothing, no evidence that we see on charts and plus both charts and both hard data. we see I mean, I had mentioned in previous videos that there were some signals that suggest that there might be some like a recessionary environment in the soft data, but it's not that at least the hard data is not supporting this idea. That's the issue. So instead of getting lost in the news cycle, I thought we would focus on the charts today. That's why in this video I'll walk you through some charts and share some a potential directional moves on some instruments based on different scenarios, and we'll kick things off with the weekly US 10-year, US 2-year charts and US real yield charts, as bond market is getting is the major focus on right now. So yeah, let's dive in and we see what the data telling us. Let me switch to charts quickly. And yeah, first of all, here what you see is US 10-year yield chart. As you can see, this is a weekly chart. There's a parallel channel that you see here, and still this is downtrending. This weekly chart was the time that all these bold statements were going on. It might go up as well, but in that scenario, if that's catastrophic scenarios comes back into the focus, I will be watching these these levels as a support. If I see that a breakout from here, or maybe if losing a 5% 10-year yields level, in that scenario I will reshape my strategy, maybe depending on this a chart. And when you go to US 2-year yields, you can see that same here. I mean, it's more like a parallel channel rather than a downward sloping, but it's still more probable to see a breakdown here than see a breakdown. And why this is a bit different than US 10-year yield charts, I'll come to that point just a little bit later. Here 10-year 10-year real yield charts. This is a 10-year yield minus inflation expectations in the market. When you subtract the inflation expectation from the 10-year yields, it gives you the real yields that investors get by investing in 10-year yield when you take the inflation out. So as you can see, here's the same. The upper bound of this downward sloping parallel channel acted as a resistance here. And since we don't see a breakout here, I still be cautious on those bold statements. That's why there isn't, still I'm trying to stick to my rules, and I just want to see some evidence on charts to change my game plan. This game plan is mainly for now based on soft landing scenarios. So try to be long in equities as long as you see some opportunities in specific charts, specific equities, or crypto side. Same mentality. Since the base scenario is soft landing, if we don't see too much destruction on the real economy, there will be much more upward room for equities. Risk on sentiment will come in, and that's the main picture roughly that I'm trying to shape in the current environment. So yeah, I had mentioned here, what's the difference between this 10-year and 2-year yield charts. The chart here you see is the difference between 10-year yields and 2-year yields. So all after COVID period, you might recall that there were a yield curve which was inverted, and that inversion lasted approximately at the end of 2024, which was called normalization actually. So here what you see is, when you come to the weekly chart, the that means that like when this is called bear steepening, when the long end of the curve increase much more than the short end of the curve, and that's what we're experiencing right now. So what could be causing this? That's the question actually. Actually, it explains a lot. That's why I'm just like emphasizing on this chart. Like, don't take this one as a chart like to do a technical analysis or something. What I'm trying to show you here, like something to analyze what's going on in the market. And when you see this monthly chart, as you can see, like apart from crisis period, when the like a short end comes, like rates comes down, as you can see, the level that we're like the level that real yields are standing right now is not that away from previous like normal levels. That's what I'm trying to say. It's not like outlier level or something. But the most important part here is what could be causing this bear steepening. High end of the yield curve is increasing higher than the short end of the yield curve. First of all, the first reason might be higher inflation expectation. Markets may be pricing in stickier inflation down the line, and which could be, that could be caused by, for sure, the tariff uncertainty. The second reason might be term premium. Investors might be demanding more compensation for holding longer dated bonds and amid uncertainty. For example, you're having like a 10-year bonds in your portfolio, but the uncertainty kicked in, the risk of sentiment kicked in. You're like, okay, in order to hold an instrument with such high maturity, I need to be compensated much more. That's the term premium mentality. And the third reason that could cause the bear steepening is growth expectation. This usually plays a role, but right now it doesn't seem like growth is the main driver, because we're experiencing vice versa situation. The growth expectations are like struggling for sure due to like potential tariff uncertainty, potential like tariffs, and for sure, we can say that the first two, higher inflation expectation and the term premiums, are the main reasons of this this like a bear steepening, this move in the long end of the yield curve. So what does this mean for markets? First of all, equities. For equities, growth stocks might come under pressure as higher long end yield, that means like a long-term rates, are increasing. That would mean higher discount rates. So when you do a valuation of a certain equity, higher discount rate would mean like a lower valuation for that equity. That's why growth stocks might be impacted. Cyclicals and value names could benefit, but the upside might be limited, since the curve move isn't really about like a strong structural growth. If the reason of this, the reason behind this like activity was like a structural growth, we might be talking on much more appreciation on equities. That's just as an example for a structural growth, for example, artificial intelligence. When it's kicked in, as you might recall, that stocks performed really well. That's the mentality. And on the equity side, financials on the other end could do well, because steeper curve generally mean better net interest margins for banks. That means like, because they're borrowing short, lending long with that mentality, and they might make money out of it. So let's look like the impact on like equities through S&P chart quickly. I would like to show you this S&P chart. Just excuse me, I'll check something quickly. Yeah, this S&P 500 index monthly chart. So here, as you can see, if you omit this like volatility in 2008 financial crisis and COVID financial crisis, you can see that there's a there's a huge uptrend started from this like a financial crisis, and it's like a really nice like I mean the trend line is first touch, second touch, third touch, and with the tariffs we saw the fourth touch. And like this parallel channel, the upper boundary also acted well, as you can see here, rejection, rejection, and rejection. So after the 2008 financial crisis, and we saw the first touch to the lower boundary here in COVID crisis. Then rate cuts kicked in, and we saw this huge appreciation in S&P 500. Then we got rejection from here. As you might recall that there was a like a hawkish shift from Fed, that and they admit that the inflation is not transitory. With that announcement on, it was I think November 2021, we saw this reversal and rate hikes started afterwards. Then we saw this like a decline in 2022 up until the AI boom. AI boom started at the end of 2002 as far as I remember. And as you can see here, technically after this kind of downward movement, we need to see some consolidation to see a really nice like a move. When you come to the weekly chart, as you can see here, I mean, I'm emphasizing here because what I want to see in like currently is exactly something like this. So after this downward, as you can see here, the percentage like it came down around like a 27%. Okay, then as you can see, it comes down like around like a 10%. Then here a monthly is 3%. As you can see, the level of decline keeps decreasing, right? And after this like a consolidation, probably without looking at, yeah, lower than average volume here, this breakout comes in, then pull back. As you can see, approximately this level acted as a support. Then this huge AI boom trend started up until tariffs news, and like after like and that I mean ended up where we are right now. So therefore, what I'm trying to see for now, seeing a consolidation like this. That's why my expectation, since this is a weekly chart, in the upcoming day, to see some swing movement around this, and I will be monitoring. It's not something like this. I still expect S&P 500 to go up. No, I expect to see some consolidation to be in again, and I will reevaluate my current mentality. If we lose this, I don't know, from 2008, 13 years uptrend, if we lose something after like if the tariff news gets like a heated, we might see some breakdown from here. And in that scenario, for sure, I will be shifting, because like that's the mentality of, I mean, your ideas you shouldn't stick them like blindly, right? I mean, if you have a perspective, if you have a rationale on any kind of trade idea, if it works, you gotta invest more. And if it doesn't work, you got to stop yourself. That's the mentality. So what I want to see here, to see consolidation, to be back in, and I think due to this uncertainty in the upcoming weeks, I'm expecting to see some swing around, let's say 5,800 levels, and like let's say 5K levels. Around there we can see some movement. So I hope this like historical chart also helps you to get some perspective. That's, I mean, at least I try to explain mine. And let me switch to quickly dollar index. But before that, I want to come back to I was talking about this like what does this like a bear steepening, the higher end of the curve goes like higher, I mean goes high more than the short end. This bear steepening meaning. So for the gold and that was the impact on equities. So what about gold and commodities? If this bear steepening is driven by more the term premium side, say from like a stagflation or recession fears, or like a tariff related uncertainty, which is risk off, it might actually support gold, right? And when you check the gold, as you can see here in the monthly chart, cup with handle, or in the like the handle part is also head and shoulder continuation. I mean, for sure I can give you a chart pattern price target for this, like approximately 100%. But I mean, I don't think that, I mean, it's really difficult to say the potentially it might go up until this level. But I've heard some revision from some major banks to like I don't know, like a 3700 levels, and like a 4K is not also still on the table for them. But I mean, that's for me, like it doesn't fit to my mentality to do forecasts like that. But after such movement, if we see some consolidation, we might say that this might lead to a bullish flag. And in the 4-hour charts, you can see here, if you want to trade here in the 4-hour chart, you can consider this as like a bull flag, a potential breakout activity, breakout move, could be used as a potential long activity. And when you on the commodities side, there also seemed to be like a coordinated effort to manage inflation through OPEC Plus from United States side. So the idea here might be to create space for the Fed to cut rates more than expected, because while this much uncertainty is like on the table, you need to control the inflation, right, as a government. And the best way to do it, controlling the oil prices. That's why in the short term, I don't expect to see any kind of huge spikes on oil price. And that's why I am seeking to be short on oil. And I don't know how many times I mentioned this one, but in the weekly chart, as you can see, here's a really nice descending triangle chart pattern. Broke down, it's broken down and pulled back, and we're here right now. Still, I think if you want to short, you can give a shot around here, or maybe if you want, you can wait, you can put a sell limit order and with a stop loss here, and you can be bearish on oil with such game plan. And also, lastly, what could be the impact of this bear steepening on US dollar? It really comes down to real yields, because that will be the main driver that will pull investors or push investors, right? If real yields keep climbing, we really like to see continuous, like, I mean, that's the mentality. If we see higher real yields, that might lead to increase in dollar index, which didn't happen actually last week, for example, because last week was kind of an outlier situation, too much volatility, and that's why it's on that sense it's difficult to say something. But what I'm watching in dollar index is when you come to, for example, let's say monthly chart, here there's like an upward sloping, like a parallel channel, and I will be following if in the catastrophic scenario for US dollar. I mean, that's what is lately been discussed in the market. But I'll be watching this like a lower band of this parallel channel, and to continue to see, like, to give some related trade ideas. At least I think still the uptrend of dollar index, when you look at this chart, is on. For example, we can go to US dollar, South African rand. As you can see in the monthly chart, here's a cup with handle chart pattern. But if you want to play more shorter like a time frame, as you can see, another cup with handle is shaping here. As you can see, this cup part, and pulled back, and we might see a consolidation a bit, and you can be long from here, for example. If you see like a turn from here with a stop like this or stop like this, depending on your game plan. Apart from that, another trade idea, Canadian dollar, Japanese yen. I had mentioned that Japanese yen is the only currency, like only Bank of Japan is the only central bank that is hiking rates. And on the other hand, Canadian dollar, which is highly correlated with the oil, considering its correlation with the oil, as like since I'm like I have more like a short mentality on oil, you can be short on Canadian dollar against Japanese yen. At least if you want to be long in Japanese yen, being against Canadian dollar might be a good opportunity, considering this head and shoulder top chart pattern also. And I think it might give an opportunity. When you come to the daily chart, you can be short here with a stop around here, or this top. That might be a good option. And pound ZAR could be another opportunity to be long, as like a UK was the only country that got hit. I mean, the least hit country by tariffs, because like it was imposed, I think, 10% to UK. And I think there's some negotiation going on today while I'm recording this video. That's why it's like a outperforming the euro and dollar index. And that's, I mean, if you just want to run away from the volatility in USD due to tariffs, you can use pound to be long against an emerging market currency, for South African rand. Why? Because if tariff imposed, you will see that pound USD, if we see the same impact that we had seen last week, we will see that pound appreciation. If there's no tariffs, that would mean good for European economy. I mean, you saw that last week, like both negative and positive news on tariffs impacted positively euro and GBP, and negatively dollar index. I'm not sure that if we see the same impact when the tariffs imposed, that dollar index will come down. That's questionable. I think that's the risky part. But if I think if you check this weekly chart, the monthly chart, there's a huge, like a cup with handle chart pattern is like a breaking out right now, and this might be a good opportunity to be long. You can be long here with a stop here. And lastly, I want to talk about Bitcoin quickly. You would recall this like pullbacks, and that's what I'm expecting right now, to see such pullback, then maybe like the continuation of this upward potential upward movement. But here, as you can see, for now it's like a 35 days, but a rectangle chart pattern might be formed. In that scenario, I'll be watching 88k levels, and on the downside 77k. But remember that if you wanna get to such trade early, you might seek for such squeeze, such consolidation with lower volume. For example, this is like a daily, and as you can see, let me take this out a bit, and here in the very short term, you can see that, let's say 86k is like a breakout from 86k might be a good opportunity to be early long, just if you don't want to wait this 89k levels. And that might lead to maybe upward move, but I will be watching mainly this level to be broken out, to say that okay, Bitcoin is back. So thank you for listening. I hope what you find is valuable for you. If you find it valuable, please like a thumbs up, like button, and subscribe to MarketSol YouTube channel. Also, you can subscribe to Rationale newsletter service from the links below, to get all these trade ideas directly to your inbox. I wish you a really nice day and week. Have a good one. Bye.